going on, guys? It's K-Dub here with another episode of CryptoZombie. Welcome back to the channel. Hope you're having a great day today. Bitcoin still doing absolutely nothing. It is just boring the hell out of everyone in the markets right now. However, I did say in my previous video that I am anticipating some massive volatility in the coming week, potentially weeks, but right now, not too much. Now, you can say that right now, currently, we still are putting in a nice uptrend. We have been putting in higher lows and higher highs, so all seems to be looking quite well. It is worth noting, Monday, right, is the final day for taxes in the US, so maybe that has something to do with it, possibly, who knows. But as I was saying in my previous video, is everyone right now just a little bit too bearish? Everyone's expecting a recession. They're expecting the Fed to raise rates. So if we know this, are we actually pricing it in? Well, that's what I want to talk about today. And by the way, guys, today's video is going to be very, very fun because I want to present to you a what if scenario for Bitcoin. So make sure you stick around all the way to the end because we do have some hopium in today's video. Of course, this is just my opinion. Remember that, but there is something happening right now in the charts that a lot of people, one person specifically says, could be quite scary. It's something we've seen before and it did not end well. However, I say that this time it's different. And I know we've said that this time is different before, but I'm going to show you today exactly why maybe everyone is getting a little bit too bearish, maybe at the wrong time. Of course, I am going to talk about the short-term price action. I did let you guys know what I thought was going to happen leading into the Monday, Tuesday of next week. But that being said, guys, we have a great video for you today. Make sure you stick around to the end. Also, there is an opportunity for some free crypto, so make sure you stick around to the end if you are interested in that. We're going to go over some on-chain data. You know the drill. Thank you for coming back. Love you very much. Hope you're having a wonderful day. If you're not subscribed, well, what are you waiting for? One of the few channels that's still putting out content in this bear, sideways, crab, boring trend, right? So let's dive in. Let's have a look. So ultimately, as I've been saying, guys, we are still trapped inside of this range every time we go up to the top. People get excited. Bitcoin's going to the moon. And then we fall back to the bottom. It's over. It's dead. Sell it all. But really what's happening is we are just consolidating. We are just bouncing. We are range bound. We're really not making, any significant lows, but we're also not putting in any significant highs, right? So this is what we need to talk about right now. Obviously, as I've been potentially expecting it, I do still think that Bitcoin is minimally going to find its way up here to around that $44,600 level. I've been saying that for quite some time now, at least for the past week. However, like I said, the last few times when we were down in this range, we did have these fake out wicks to the bottom. And you can see they did come down to these levels right here. Now, I'm not saying that Bitcoin's going to go down to 34,000, but you can see we do have this other support right here sitting at around 36,000. So it's actually 36,200. So if you are potentially looking to trade this, I would actually wait. There is a move on the smaller time frame I'll go over in a second if you're really trying to trade the 4-hour. But ultimately, what I could anticipate is something like this, flash crash down to about the $35,000, $36,000 area, bounce, freak people out. They think that this is going to act as resistance, bounce around, and then I do think we eventually come up to this level. I think that that is the most likely move that we should see for Bitcoin. Obviously, if we have something more severe, well, then we'll have to reevaluate our situation. But, I've been talking about this $44,500 level, and Pentoshi says 44.5K is the most important spot for bullish momentum currently, 42K on the daily resistance. Below bias is for redistribution and another leg down. Think buyers need to step in pretty quickly. So I do respect Pentoshi. I agree with him. Obviously, if we can't break this level, it could get pretty ugly for Bitcoin, which is why I am keeping my eye on that $44,500, $44,600 level. But as you can see right now, this is on the lower time frame. Take this with a grain of salt, but some people like to trade these patterns. We are putting in. You can actually argue in a way this might even be like a bear pennant or something like that because it is coming off of a downwards move, right? We have to be honest with that. The thing is, though, is if you actually do take this move and you break it to the downside, you're actually putting us down here at around $32,600. Now, if we go back over here and we look at 32,000, 32,000 would bring us below this red zone, which would actually be not necessarily the worst thing for Bitcoin, but it would be a little worrisome. Then we would essentially just be putting in, the giant M-shaped pattern that I've talked about for months on this channel, which is still a possibility. So if you're playing it short term, watch this move. We're going to have a breakout or a breakdown. Either way, this is on the 4-hour. Not really concerned with the 4-hour right now. But what I do want to talk about is the overall trend of Bitcoin, right? So obviously right now we have been putting in higher highs and higher lows. However, now this is on the weekly, right? But if you do sort of just take the general area of Bitcoin, so let's actually just trim a little bit off the top right here. Like I said, we're having fun, but stick with me here, right? So let's just say that, essentially anything really above this $60,000 area right here was all just, let's say, bull traps. And we could say essentially, anything sort of below, let's say this 31,000 area here was a bear trap, right? So we're just trimming the fat off the sides, right? Because those are the extreme moves. Well, what do you see that we're actually potentially forming here, guys? You actually notice that we are forming what I consider potentially to be a bit of an ascending triangle, right? You can see that we're actually coming up like this, and we're forming an ascending triangle. So my question to you guys is, if you do think this is possible, then are we actually putting in a giant bull flag? Or a bull pennant, depending on how you're looking at it. Like I said, if you don't make it into a triangle, we just take the tops and the bottoms, right? Then you could just say, trim the fat off here, trim the fat off here. And essentially, what do? You have this giant bull flag forming, right? Now, I know a lot of people say, well, in order to be a flag, it has to be, falling to the downside. Okay, that's like traditional technical analysis, but let's be honest, Bitcoin tends to kind of do these crazy things. I mean, we have Bart's, right? Bart Simpsons. You don't really see that anywhere. So Bitcoin is a little bit of its own beast. But that being said, guys, let's not assume that this is a giant pole, because that'll take us up to like $300,000+ or something like that. Let's just take, just more of the, I guess, safer play, right? The more conservative play, right? Essentially, you would just take, the level from here to the top here, which is where we do have this, pennant forming. Could be a flag. Like I said, this is hypothetical. But if it was, in fact, an ascending triangle, well, then basically what you would do is, you would bring this sort of to the breakout point right here, assuming that we break out. It doesn't really matter where we break out, actually, because, the top is flat. We can even put this over here. It doesn't really matter. We're just going literally for price here. That actually brings us up to about $128,000 for Bitcoin. So let me know what you guys think. Is it a possibility that we could be forming? Now, keep in mind, way back here, okay, when people, were thinking that we had bottomed out, what were we doing back here? Well, we were actually forming a descending triangle, right? So this is a bearish pattern. And look what happened. Once we finally broke, what do? We dumped. Well, over here, potentially we could be forming, a ascending triangle, right? So that's all I'm really trying to point out today, guys. I just wanted to bring you a little bit of hopium. We do have a little bit more we can go over, but, what if? What if? There's a little bit more. I'm going to dive into this. Don't think that that's it for today. But as you guys can see, if this is what we're forming, essentially, traditionally, this is a trend continuation. So I just want to stir the pot up a little bit, want to piss the bears off a little bit. Look, I get it. Recession, rate hikes, not looking too great macroeconomically, but what if? I just want to think, what if, guys? Now, something we can see right now, okay? That was just having some fun, all right? But if, like I said, hey, it's a possibility, right? Hindsight is 2020. We'll know if we were wrong or right. But I just want to keep it a little bit up in here. It's been very down lately. Everyone's sort of sad. Everyone's bored. Everyone's leaving. So I think potentially it could be an excellent opportunity for accumulating, being down 40% off the highs. I would say if my favorite store was selling my favorite item for a 40%, 50% discount, I wouldn't wait next week until the price went back to regular, right? Not financial advice, but the one thing that I did point out, guys, was over here on the daily, we were seeing this golden cross. And of course, we did have that dump as to be expected, right? Because these are lagging indicators. But you do notice that when we do tend to have these crosses, it usually signals a continuation to the upside. Even though right here, yes, technically we went up from 44,000 to 52. We came back down to 41. Oh no, fake out, but then what did we do? Went all the way up to 69,000, right? So this could be the similar situation where we're having this fake out, it dumps, consolidation below the 100, and then we have that breakout anyway. In fact, Velvet pointed out, and I'm using the daily, but if you use the 12-hour, he points that if you look at the 200 and the 50, historically, every time you have the 50 moving over the 200, forming a golden cross on the 12-hour, you actually do have massive continuation moves to the upside. He points out this one that, and vice versa. Obviously, when it crosses, you fall to the downside. So right here, May 17th of last year, we had this cross and the price, obviously fell down for Bitcoin. Right here, we have the cross going the other way. Price went up for Bitcoin, right? So very interesting to see that he points out that we are having this cross again right now during a time when everyone is panicking and everyone is absolutely bearish. So, like I said, what am I looking to actually confirm that we have that continuation move? Well, I'm looking for some volume. There's not enough volume right now. There's not enough momentum to push the markets to the upside, right? If your car is stalling out, you don't have enough momentum. Someone's got to get it in the back. They got to push it, right? Or maybe you got to gain some momentum, go down the hill before you come back up. It's kind of like, I use this analogy a lot, but have you ever held a beach ball and you hold it underwater and you let it go, right? And it flies up? That's kind of what you would need right now. And that's why I was saying that we do have these wicks that come down here. And it is unfortunate because a lot of people, they do go long at these areas, and rightfully so. This is technically the area that you would want to put in a long. You want a long support and you want a short resistance. So if you guys do want to learn how to trade, make sure that you check out the links below in the description. Also, popping up above, we do have a tutorial, multiple tutorials, by the way, lots of bonuses. But this is essentially why right here, you could technically be setting up your long, but you have to understand that there is this possibility for this wipeout. So if you are using high leverage, you could definitely get wrecked on this move. The safer play personally would be to either make sure that we're having a definitive trend in either direction. Right now, we're still just in a crab market, or wait until we have that capitulation wick like we had here. It's not really a capitulation wick. It's kind of more just like a scam wick, I guess, down here, and same thing down here again, maybe right here around the $36,600 level, which is where I am looking to buy, and I will be looking to long if we can find support there, or if we do start to bounce quick. And make sure that you have the volume. You want to see the volume come in, right? If we have this little volume down here, then I won't consider it to be a true move. But if we get that volume and we get that wick coming to the downside, then personally, yes, I do think that we're coming back up here. I do think that Bitcoin is going to make one more attempt to push upwards with that $45,000 area acting as resistance. So like I said, guys, if you are looking to trade, here's another tutorial. There's all different ones. You guys can check out STEPNx. They have $10 a month spot trading. Links below if you want to get those bonuses. But talking about the dollar, so you're hearing people say, oh, the dollar is strengthening. The dollar is getting stronger, right? Because the Fed is tapering. They're raising hikes. They're becoming hawkish. Well, if we really see, like I pointed out, guys, the last few times that we broke above this critical resistance, which I don't know if it's the psychological 100 level, maybe that's it, human nature, people just like round numbers for some reason, but you can see every time 100 right here, right? Resistance, boom, down, resistance, boom, down, right here, break above it. Oh, sorry guys, fake out. We go down even lower, right? What happens right here? We break out above it again. And this was the critical downward sloping resistance. Oh, fake out, boom, potential double bottom. I hear you guys. That's why maybe they're getting a little bit excited, right? These double bottom patterns. But what are we doing? We're getting held down again. So most likely what you could see is a breakout to the upside, a fake out breakout. This is going to send the Bitcoin price down because people are going to think that, oh, the dollar's breaking out. I told you guys, recession, get out of these risky assets. And then what happens? Nevertheless, fakes us out again, comes down, and Bitcoin continues to the upside. So that's kind of my prediction. I hate making predictions because you never know what can go on in this crazy world. I just think right now, people are too bearish. Often when every single person in the room thinks the price is going to go lower, it doesn't. When we were at $3,000, people were calling for $1,000. That was the bottom. When we were at $30,000, people were calling for $20,000. $30,000 was the bottom. And once again, you're hearing people call for these levels again. Even some people traditionally saying we need to retest the 20K all-time high because that's what happens in traditional markets. Guys like Gareth Soloway are saying that. But if you actually look historically at Bitcoin, Bitcoin never actually comes down and retests the previous high once it breaks beyond it. So could things change? Of course they could change. But former Goldman Sachs executive Raul Pal says, he says that the crypto markets have reached their relative price low and that the industry is positioning itself for another rally. In the April 2020 issue of GMI newsletter, Pal explained why he believes that Bitcoin, which he called the future, could one day have a $10 trillion valuation. Now, it's not that crazy when you actually think about it. Look at some of the assets under management that some of these guys have. BlackRock, for example, and that's just one entity. Also keep in mind that as much as we do have the institutions in right now, we do not really have all of them, right? We have some of them that are dabbling their feet. Wall Street's coming in. You don't have sovereign wealth funds. You don't have these big players, coming out of the United Arab Emirates yet. They really haven't allocated. These guys have billions and billions and billions of dollars, literally, that could come into this market cap. And like Kevin O'Leary had mentioned the other day, even if you just got like a 5% allocation from these guys, you're talking about a $400,000 price increase for Bitcoin just from them alone. That's not even like saying Bitcoin's going to go to 400. He's saying that it'll add 400 to the overall price as is. So let's say at this point, Bitcoin maybe is trading, or let's just say Bitcoin's right where it is right now. Let's say Bitcoin's still just trading around 40,000. That's a $440,000 Bitcoin just from the entrance of these guys alone, not considering all the rest of the world that has still yet to allocate themselves to Bitcoin and cryptocurrency, right? So he was also on an episode of the podcast with Leah Heilpern, and he said that there were a number of potential catalysts and new developments in the crypto space that could trigger another price rally. He predicted that the upside potential for crypto was high, while predicting that the market had already reached a relative price low. He says the balance of probabilities is that we made the low last year, we rested the low this year, and I think the low is in. Also, it's not here in the article, but I did watch the video. And he also talks about when you have guys that are looking, these big players looking to allocate billions or even trillions of dollars in an asset or in a place where it's actually safe, they're going to go to Bitcoin. He says, okay, they might go to Ethereum, but Ethereum and Bitcoin are essentially two different monsters, right? Ethereum is really more of the network for, obviously Ethereum has a lot going for it. Let's be honest, guys. It has NFTs, it has DeFi. Bitcoin's not really doing that. Even though some people are trying to build on it, Bitcoin really is trying to be that store of value. And although people disagree with Bitcoin being a store of value because, it's down 40%, that's not a store of value. Well, you have to look at it in the long run. I mean, Bitcoin during the crash of the pandemic was in the 3,000s. So right now, it's sitting around that 40,000, 42, whatever $1,000 level. I would say that's a pretty good hedge if you ask me personally, but the day-to-day volatility can definitely mess with your head a little bit, right? But he goes on to say, Bitcoin isn't just a currency or even just a store of value. It is an entire trusted, verified, secure financial and accounting system of digital value that can never be created outside of the cryptographic algorithm. It is nothing short of the future of our entire medium of exchange system and of money itself and the platform of which it operates. Now, if you do want to get back to some data, I love Plan C. Definitely make sure you guys go subscribe to the Real Plan C over on Twitter. Amazing analysis. So he points out that for the fourth time in Bitcoin's history, we have left the blue zone. The last 3 times this occurred was the bottom for Bitcoin. Actually, the bottom was already in by the time we left that zone, and a massive uptrend followed. He says probably a coincidence. Actually, I am going to retweet this because this is a very good tweet. Make sure you guys also follow me over on Twitter as well. I do a lot of retweeting, but I like to, give other people their moment of spotlight as well. I talk for a half hour a day on these videos, so I like to look at other analysis. Another thing that eCoinmetrics pointed out over here, or eCoinometrics pointed out, is if you actually look down here, so you have the blue dots being the whales and small fish down, right? You have the green being whales and small fish up, the orange whale and small fish down, whales and small fish up, which is the red, which means that essentially what you're seeing right now is that both the whales and the retail are buying. So it seems like everyone is starting to buy at these levels. And I did point this out the other day, but I do want to give a shout out to the Chain Reaction, who said it's not the size of the wallet, but time in the market. Right now, it looks like those who bought Bitcoin during 2021 are being tested heavily. HODL waves, which we just went over like 2 videos ago, suggest the primary sellers are those who have coins between 6 and 12 months old. You can see right here, most of the sellers, most of the selling happening right now is from basically wallets and addresses that have been created in just the past 6 to 12 months. These are new people, new entrants. They just dipped their toes in crypto. Crypto and Bitcoin are falling. They're freaking out. They're panic selling, or maybe they're just coming from a traditional hedge fund and they're just selling to cover losses. Who knows? But you're not seeing the long-term holders sell. And every cycle creates new holders. Trust me. The 2013 holders into the 2017, and now we have the 2021. Maybe you just came in this year, and welcome to the club, by the way. Hope you're enjoying the ride. But ultimately, It's really not that worrisome when you have a look at these metrics. Also, Will Clemente, who does a lot of on-chain data, pointed out in his latest edition of the Blockware Intelligence newsletter, he says that despite Bitcoin's volatile price action, market participants are buying and holding Bitcoin at a historic rate. Underneath the surface, there is a heavy phase of accumulation on-chain, right? Exchange outflows have reached a rate that has only ever occurred 3 times before in Bitcoin's history. He says this week has seen an uptick in whales holding for the first time since January, showing an increase in supply held by entities with over 1,000 Bitcoin. And I know what you're saying. What about the exchanges? Well, this is not counting the exchanges. We know the exchange wallets. These are other whales, anonymous whales, unaccounted whales, right? We don't know who these people are, but we do know that they're currently buying at these levels. Now, let's take a little bit of a flip side approach. I want to turn the spotlight over to my buddy Benjamin Cohen. So he says that maybe it is as bad as it looks, right? According to him, he talks about this uptrend that we had and the fact that we were putting in these higher lows. You know, he points out how we had put them in back here. Everyone was getting excited, and we ended up having a massive 50% dump. I don't know if any of you guys were around for that. That was a scary couple days. But yeah, we got through it. So anyway, he points out that we could be doing something similar right here. So I'm not going to play the video, but essentially he says there have been a couple of times where we've seen a similar type of price action. One time in 2013 where we were also putting in higher lows. We put in a low, we put in a higher low, and then we went on. And then we had in 2018 where we were putting in the higher lows, but he says putting in higher lows, so you could have argued the same thing, but eventually that low ultimately fell out and we ended up putting in a lower low. Now I'm going to play devil's advocate here, and it's not because I don't like Ben. I do like Ben. He's a really cool guy. You guys should definitely check out Benjamin Cohen's channel. I actually got a chance to meet him. He's a very humble dude, but yeah, this picture was taken outside of his amazing spot. Not gonna out where this was located, but I will say this was a very, very, very nice place that Ben hangs out in Miami. So congratulations, Ben. You're obviously doing quite well. But if you do take these scenarios, and actually you could even say that this was a scenario back here where we actually put in a little bit of an uptrend right here, right? So what happened here? Okay, so essentially we did fall. But the biggest scenario difference between this, and I just pointed this to just, first of all, this was the COVID crash. So let's just get rid of these ones right here. Let's actually just use the ones from the example super quick. Why can't I delete the box? There we go. So, ultimately right here, essentially you could see we were putting in, these higher lows, right? So everyone was getting pretty excited about this, right? We had the bounce. Okay, great. We came up, higher low, awesome. We came up, higher low, awesome. Broke it, and actually if I should have extended this trend out a bit right here, you can actually see that where we then hit it as resistance, that was sort of the ultimate, failed rally. However, I just want to point out there is a difference between this uptrend and the uptrend that we're having right now, and that's essentially the fact that, this was out of a massive downtrend. I mean, look at this. Every single thing we put in was lower. It was a lower high, a lower high, a lower high, a lower high. So we were just getting lower and lower and lower. So yes, we were putting in this uptrend, but it was an uptrend within a downtrend. Now, if we actually come over, to the similar scenario that we're having right now, okay, so you could take just this area right here and saying, okay, well, this is an uptrend within the move. But keep in mind, guys, we have a massive uptrend right here, right? I said it could even potentially be, some kind of a bull flag, pennant, ascending triangle, whatever shape you really want to call it. But ultimately, we are finding the resistance up here, but we are putting in this higher low. Difference is, this is coming off of a massive uptrend. A massive uptrend, guys. This was coming off of a massive downtrend. So it's a totally different market structure. If I take all these away right here, I think you guys can see that clearly there's a difference between this and the other one, right? So that's all I wanted to point out. Essentially, this area right here coming off of a massive downtrend. Yes, we were putting in higher lows, but overall, we kept putting in lower highs, lower highs, lower highs. Whereas over here, we're actually putting in, even if you take this right here, right? We have a high, we have a higher high, we have a higher high, right? Higher low, higher low, higher lows right here. So ultimately what I'm saying is this is a different structure. So yes, we have seen this happen before. However, the markets are totally different this time around. We also do have a potential looming recession and everything else, but just trying to have fun in today's video. So I did want to end on some Good news, I guess. I don't know if you can really report news from Russia as being good. I don't obviously approve of war. I don't think anything that's happening over there right now is good at all. But this is just something to report. It is a crypto channel. We do talk about crypto. On Friday, Russia's Ministry of Finance submitted a finalized bill on the regulation of cryptocurrencies in Russia. The bill, which is titled On Digital Currency, contains a detailed regulatory framework on the circulation of cryptocurrencies and for the first time touches upon mining in detail. So opening up new opportunities for Bitcoin miners who currently fall into that regulatory gray zone. Most notably, the draft law says that digital currencies can be accepted as a means of payment that is not the monetary unit of the Russian Federation. The bill recognizes further cryptocurrencies as legally accepted investment vehicles. So, we impose the sanctions, they turn over to crypto, right? That's just the way it goes, guys. So ultimately, like I said, having a look right here, we are still in this uptrend, and I am looking for volume, and there is this support down here on the wicks, which is also trending upwards as well, which is why I said there is that possibility of a fake out to the downside right around the $36,000, $500 level. Maybe we go a little bit lower just to spook investors, and then we come right back up, and then I do still believe we're headed around here for this this is the 46,000, but I think the $44,600 level is more applicable. And the thing I wanted to end on super quick, guys, this is an opportunity if you'd like to get some free crypto. So STEPN is a project that we've been mentioning on the channel. They've been doing quite well, actually, even today during this crazy market. STEPN is actually up. I checked on CoinGecko this morning, and essentially they have the STEPN ASICS sneaker NFTs, and they are going to share 3,000 GMT in a token prize pool. So you can literally get some of these tokens for free. The top 30 users ranked by their NFT transaction volume with the NFT sneakers mystery box collection on Binance NFT marketplace during the activity period is going to share the 3,000 GMT token prize pool. So they say this is the very first time, the very first limited edition of the STEPNx ASICS NFT sneakers. There are 4 sneaker types, each designed to suit a different exercise intensity and fitness level. Users equipped with these NFT sneakers in STEPN mobile app can move and earn tokens. So what do you have to do? Essentially, all you got to do is download the app. You can go on iOS or Android, and then once you get everything set up, you got to go through your setup, obviously. Choose BNB Chain, create a BNB Chain wallet, transfer your STEPN ASICS limited edition sneakers to BNB Chain wallet, and that's pretty much it, and you're basically entered. So check this out, guys. If you want, you can enter right here. I will drop a link below in the description. Full transparency, it is an affiliate link. You don't have to use it, but I did just want to bring you an opportunity. Even in these boring times, you can still earn free crypto, guys, right? Earning, staking, providing liquidity. These are all opportunities. Trading NFTs, getting free GMT. There you go. So that's it for me. Hope you guys got some value out of this video. Thank you if you stuck around all the way to the end. Hope you guys are enjoying your day today. We got some holidays going on over here in the US, so if you're celebrating, hope you're being safe, having a great time with family. That's why I wore my pink today, because it's spring, baby. It is spring. And you know what comes after spring? Summer. Yeah. Well, okay, but I mean, not realistically, but spring, summer. So this could be like the spring of crypto going into the summer. No, okay. I love you guys. You're awesome. Thank you so much for coming back to the channel. You're the reason that I make these videos. I will see you tomorrow on Monday. I think it's gonna be a crazy week. I do. So hope you're prepared. Hope you're ready for it. Thanks for coming back. My name's K-Dub. This is CryptoZombie. And of course, if you are looking to trade, number one, make sure you get subscribed to my channel. We go over this content for the most part whenever I think something is important and worth bringing up. And if you want to learn how to trade responsibly and profitably, make sure you watch the tutorials popping up right here, right now. $8,000 in bonuses below. Until next time, stay crypto. And of course, peace out.